This is the first time in 4 whole years the Fed's going to drop rates, almost certainly. I mean, the only question on people's minds is it going to be a quarter point or a half a point? This is going to sound like out of character for my normally G-rated show, but I look at the market now and I see what I think is grind and tease. It always is this way before Fed meetings, but especially this one. The grind is just what you're seeing today. Just not going anywhere, just in a little bitty range and no direction at all. And the tease is on occasion, it'll look like it's kind of going somewhere. I'm going up a little bit, and the bulls pile in. It's like, no, I'm not, and then vice versa. At this moment, the ES is up 0.03%, which is 0.03% higher than if it was a Saturday. I mean, it's not moving. Everything's just stuck because they're all waiting for the Fed. And more importantly, they're waiting for what the reaction will be to the Fed after Powell speaks, because you can never tell. Crudely speaking, and by crudely, not back to the grind and tease, but just generally speaking, what we've seen recently is the market tends to bid itself up to the Fed announcement, and sometimes even big time during the press conference. And at some point, sometimes it's during the press conference, sometimes it's overnight, then everything falls to pieces. So that's the real tease right there. And I guess we're seeing it play out right now because we've been just going up and up and up. Lifetime highs today on a lot of different indexes. Same old. And I keep saying it. Yes, they're going to cut rates. And yes, they're going to cut them for a long time, maybe even years. It ain't going to do any good. The festivities begin on Wednesday, and it will be touted as great news that our national nightmare is over, and it's going to be money printing all over again. But things are seldom what they seem, right? As always, begin with a spider, and it hasn't changed a bit. What do I mean by that? We have not made lifetime highs, and we have simply made another slightly lower high. Here's the lifetime high, here's the lower high, and here's the lower high. We've basically been hanging out about where we closed on Friday. It has been a snooze fest. If you've got projects around the house between now and the end of Wednesday, it's probably a great time to tackle them. The diamonds, lifetime high. Dow Industrials, never been higher. There it is right there. Diamonds, never been higher. Up about 0.5% right now. And there you go. Overseas, emerging markets, it is also up a little, but I would point out to you this zone that I freshly tinted in pink, not exactly looking like the sort of thing bull markets are made from. And certainly not the thing that the beginnings of bull markets are made from. It's just been sloshing around in a very large range and possibly hammering out some kind of major reversal pattern. It would take a lot to get there. We would have to get below that pink zone right there. But as it is now, if nothing else, we're awfully high in that range. And although it's usually not that useful to draw in gaps on outside the U.S. stuff, because they tend to be gappy by their nature, I'll do it anyway, because it's worthwhile. We haven't had a meaningful gap in here for a little bit, so we'll just use that as a modest resistance level. EFA, which I've been a little frustrated with, and it's up to about 0.2%. This is also up. I mean, all right, so how high would this need to go for me to completely give up on this thing? Well, it would be in stages. I've already reached that partially now. I mean, I've trimmed about 40% of this position away as it just keeps climbing and climbing and climbing. If it were to cross above this zone here, which isn't far, I'd probably trim back more. And absolutely, if it pushed lifetime highs, just forget it at that point. I mean, long term, nothing really changes because it has resistance up at this red line, but that's a long ways from here. I'd rather not stick around and just kind of hope and see what happens. So EFA, a bit of a bummer at this moment. As far as Brazil, this is a new one for me as of today. Got a good price on it so far, and we've got a shooting star. One would counter that by saying, well, you had one on Friday too, and a lot of good that did you. Well, I didn't short it yet because we closed this gap. So we've got a shooting star here and a shooting star here. And the gap closure, I think, was just about perfect. Let's see, 30.19 is the gap. Today's high, 30.19. Perfect. Absolutely perfect. So that's EWZ Brazil, like so. So that's a really tight stop. And we're about 24 pennies below that right now. One item that splashed some cold water on the market was news from Apple. And the news was something you and I have talked about for months and months and months, years at this point, which is each new iPhone is becoming marginally less exciting to folks. I mean, the difference between, say, the second iPhone and the third iPhone was probably a pretty big deal. But as we get into like 15, 16, 17, on and on and on. The marginal gains are so modest that most people are like, I don't care. It is not worth the hassle. It's not worth the expense. I'm happy with my phone. The fact you've added a 17th lens to the back, I don't care. And lo and behold, that's exactly the news that came out over the weekend. It's like, they're not flying off the shelves quite like we hoped. There's only so, what are you going to have, the iPhone 100? I mean, how long are you going to continue this? Can you imagine if people of a certain age getting rid of your telephone, like back in the 70s, let's say, every year throwing your phone away and getting a new one? No one would bother. The phone you had was grimy and 20 years old and it worked just fine. That's a little bit like iPhones are now. I have an iPhone 10. I'm a pretty tech-loving fella. I have no interest in a new phone. Zero. So that seems to be increasingly popular point of view, to basically just not bother. So Apple is down about 3%. For a company that size, that's a pretty good chunk of change. Like $100 billion or something like that, literally, I think, on the market cap. Over in semi-land, little bit of softness here. Of course, Jensen Huang on Wednesday put a fly in my soup that morning and saying that things are going peachy. And that Wednesday, a huge rally, carried into Thursday, carried into Friday. Seen a bit of that sell-off now. We've basically disposed of all of Thursday and all of Friday at this point. We're back to where things wrapped up on Wednesday. So NVIDIA down about 2.25%. It is no surprise to me that their sales are going great. Why? Well, it's like a virtuous cycle. You've got I have trouble calling them startups because they're getting like billions of dollars in funding, but you have new corporations with billions and billions and billions of dollars in funding, almost all of which goes to buying NVIDIA chips. At some point, and a point may already be here, but at some point, all that fresh VC money, all those fresh purchases, all the need to build the biggest data center in the world will stop. People will be satisfied with what they have and they want to see what happens next. Then NVIDIA is going to hear like echoes down the hallway. And so this ain't going to last forever. How many more quarters are there of this like robust sales? I don't know. It could already be over. We could have another year of this. I have no idea, but this is not sustainable. And when it stops being sustainable, look out. It should be really something, because it's the biggest corporation on the planet, and it's, in a way, it's very niche what they're doing. So this is not a new Coca-Cola that's come to us. ARM Holdings, which I've got puts against, this is down nicely, almost 6%. I like it. AMD, I have no position, and it's annoyingly robust. It's actually up a tiny, tiny bit, a few hundredths of percent in the face of the semiconductor sell-off. Amazon is down about 1%, and it's got this nice diamond pattern here. And I think a tight stop on this would be around about 188.5. A generous stop for those with more fortitude and patience than me could go as high as 192.24, this gap up here. And I'll just leave it there because I don't have a position now, so I'm not going to wring my hands about it. But that seems an appealing risk-reward ratio. In EV land, I just got to mention briefly, there's a whole boat of companies that have just gotten destroyed in the wake of the post-Green New Deal never happening shtick. Canoe is one. The loss is literally like 99.8%. It's gone from like $600 to $1. Quite the wipeout here. I'm certain if you went back to late 2020 and early 2021 to look at the analyst ratings, it would be just buys and strong buys. I don't even have to look. I can guarantee it. Nothing about selling or short selling, just buy. But that's the aftermath. Laser, same thing. Luminar Technologies, LECR. The founder of this company actually bought, I believe, the most expensive residential property in the state, because there was a time he could sell it for a lot of cash, and bought Forbes. He owns Forbes magazine now. His shareholders, they didn't buy Forbes. Tesla still is kind of the ultimo hombre here, the last one really standing. It's become a pretty boring stock. It's trading around 230 or so. And as I've said over and over again, even for the balance of this year, I really think the most logical target would be like 245 on the upside, but that's really about it. But it's kind of the dynamism of years past is definitely gone. And I noticed that somebody brought up an old Cathie Wood tweet that predicted by 2024, Tesla could be, I think the figure was a $15,000 stock. Now, it's only September 16, so there's still time, but that just shows the lunacy that took place just a few years ago about predictions. Commodities, having another update, but I think there's a hard stop right there with respect to that gap. in terms of both oil and gold prices. As far as gold, having another good day, nice zip higher. I think there's some backing and filling that's going to take place here. You know, I always feel like this is a disclaimer. I love gold. I want it to do well. 5,000 an ounce, terrific. I'd love it. Terrific, yay. But it's not going to go up in a straight line. So I think we're due for some kind of backing and filling here. But there's GLD way above its descending channel. Miners are already starting to feel the heat. There's GDX down about 0.4%. The juniors are still up a little bit, but as you can see, they've gone very fast, very, very high, very fast, which has become a bit of a favorite of mine right now. This is XME. I've shown you the XME GDX ratio chart again and again and again, which to me suggests XME being a very appealing short position. And so I entered this on Friday. I added more today. And a tight stop on this would be somewhere around 59.29, but I really like the look of this chart. So